What's up, traders? Unless you are living under the rock, you must have heard about a very popular forex trading strategy known as the GUORB strategy. This strategy is a strategy I've also taught you guys here on YouTube, and testimonials like this are traders using the strategy. But now the sad part is not all traders are finding success with this strategy because there are some traps, there are some loopholes that you need to understand with this specific strategy to be able to make money. So on this video, I'm going to be covering all the loopholes, all the traps with this strategy, so that the next time you want to trade with GUORB strategy, you're going to know exactly what asset to trade, what session to trade, the risk management, and everything that's going to encompass all of this to give you an edge at the end of the day. Now, before we even go into the video, I don't want to waste much of your time. The main question: what is the GUORB strategy? GUORB strategy just stands for the Godlove University Open Range Breakout Strategy. Open range breakout strategy is not anything that it's not like, I'm not reinventing the wheel. It's always been there. But now I have fine-tuned it to work according to my own style of trading, according to, the adaptations in the market. So GU just stands for Godlove University. So since that is a modification for my academy, modification for my own style of trading, the way it works, that's why it is called the Godlove University Open Range Breakout Strategy. Now, does it work? 100% yes. Not that 100% you have all the trade right, because if a mentor is telling you you have all your trades 100% right, the person is trying to scam you or trying to sell you something. There's no way, technically no way you can have 100% win rate, or you can have all your trades right, because you can't predict or you can't control the outcome of some trades. So does it work? Yes. Is it beginner friendly? Capital yes. Immediately after watching this video, if you go back and watch the strategy video for this particular strategy, I can promise you, you'll be able to start seeing consistent profit with the strategy. So it's beginner friendly and it does work. So I just wanted to make it clearly. So those of you guys who haven't watched the strategy video I made about this strategy, almost about 40 minutes, just click the link above to first of all go and watch that video, or I'm also going to leave the link on the video description. So when you watch the video, everything I'm just going to be explaining on this video, I'm going to be focusing strictly on the traps and the loopholes. So make sure you go and watch the strategy video. All right, let's get straight into the video. We're not wasting any time. Point number one with the ORB strategy is why many people don't find success. The number one reason you will never find success with a GUORB strategy is you don't understand the sessions you are trading. All right, you don't understand the session you are trading, because remember, the open range breakout strategy takes advantage of the opening and closing of major market sessions like the London session, the Asian session, the Tokyo session, or the New York session, because the forex market does work in what we call market sessions. So at the beginning, at the end of this session, there used to be massive volatility and liquidity. So it's that massive volatility and liquidity that I want to take advantage of it. That's why some traders who don't understand what goes on, they'll go and say, oh, it looks like gambling, bro. It looks like it, bro. Everything in life is a gamble, but it doesn't become a gamble when you have an edge. With the risk management we have, I will know exactly what we are doing. The strategy is not more a gamble because we have an edge, we have an approach we're using to take advantage of the market at the opening of those sessions. So I just wanted to make this very, very clear from the on-go. All right. So one reason they fail, they don't understand market sessions. Let me just quickly share my screen so that I can show you guys what I'm talking about. Let's just go here. So here you can see, when you watch the strategy video, you know, obviously we have this tool is market session by Leviathan that you put on your screen, and it just technically shows you the opening and the closing of major market sessions. As easy as that. It just shows you the opening and the closing of major market session. And if you can see right here, we have the opening of the Tokyo, the closing of the Tokyo, opening of the London right here, the closing of the London right here, opening of the New York here, the closing of New York right there. So at this opening and closing, you expect a lot of volatility in the market, because why? Many participants are coming into the game. Some new traders or new participant hedge funds, the banks, New participants are coming into the game, and at the same time, some old participants that were already in the market, maybe they are closing for the day, they're taking their profits and stuff like that. So all of that is going to obviously cause a lot of volatility at the start and at the end of that session. Now, if I'm trading something like gold, all right, if I'm trading something like XAU USD, I need to ask myself, what session dot XAU USD trend very well? The London session and the New York session. That's it, the London session and the New York session. So even though the sessions are too many, I'm going to know the exact one I'm going to be trading. If you don't understand these sessions, you're not going to find any use with this particular strategy. So since I already know the currency pair I'm thinking of trading is XAU USD, and it trends very well during the London and the New York session, I'm only going to come here and I'll look for the open of the London and the New York session, or the close of the London and the New York, meaning I'm only going to trade from here to here. So let's do the math and see if we would have made money or not by just trading only these two sessions. We're going to treat it as if, you know, we're risking 1% per trade, and then we see how it goes, right? And for the strategy, it's simple. What you do is the last candle before the session open, you can see this is our London session. As soon as this last candle before the session opens, you put your buy stop above that candle, sell stop below that candle. So the stop loss for your for your buy stop is going to be here, and the stop loss for your sell stop is going to be here. So let's just put it on this one. Going ahead, we're not going to take much time again. So this is going to be, as soon as that candle would have closed, this would have been our first trade. Stop loss would have been below this candle there. Risk to reward of 1:2. That's it. That's risk to reward of 1:2. And then our sell stop would have been here. Stop loss. Okay, let's cancel this. So stop loss for our sell stop there, we go for a risk to reward of 1:2. Good. So you see, those are both trades. And if I can zoom in, let's zoom in so that you guys can actually see what happened. If I can zoom in very, very clearly, you can see as soon as the London session opens right here, our buy stop was triggered. All right, our buy stop was triggered, but unfortunately the market didn't go in our favor and it came down. And in most cases, once one is already triggered, I delete the other one. So this one was automatically deleted and I lost 1%. Let's quickly go to the end of the London session to see what happened. All right, let's check the end of the London session is right here. So the last candle before the session opened, our buy stop would have been there, and our sell stop for this one would have been here. So you can see this one, our sell stop would have been triggered and we made 2%. So we already now, we make minus 1% plus 2%. We are up now plus 1% for the day. The New York session came right here, and this was the last candle before the New York session opened. Most of the time when I see the candle this big, I just let it go. We're going to talk about it. When I see the candle this big, I don't even bother. The last candle before the session this big, I don't even bother putting my buy stop and my sell stop, because the range is so big. I don't want to be risking, you know, 200 pips on a trade like this when I'm using the strategy. So when it's too big, I just let it go. So you see, I'm only focusing on what? On trades, on trades that are on assets that trends very well during those specific sessions. That's why if I come here, let's just check now the Tokyo session. It would have been a loss because I can't be trading gold during the Asian session. Last candle before the market session would have been here. You can see our buy stop would have been triggered and our sell stop would have been triggered. So you would have ended up losing 1% if you left your other stop to be there, or you would have ended up in a loss. So it's very, very crucial when you understand different market sessions and assets that do very well during those market sessions. The next point on our list why you will never find success with a GU or RB strategy is lack of experimentation. All right, lack of experimentation. Now let's go again here. I'm going to take another one on NASDAQ. Let's take NASDAQ so that I can show you guys a typical example of what I'm talking about. Lack of experimentation is very, very important. What is going to give you money at the end of the day, bro? It's data. Data is king. That's what is going to give you money at the end of the day. So if I'm taking something again like, NASDAQ, NASDAQ also does very well during the London and the New York session. So you have two options. You have two options when you are trading the GUORB strategy. For example, you can see this was, let's just go back. Let's go a few candles behind. Okay, where is New York? Let's just take New York for example. You can see this was the last candle before the opening of New York. This is the New York line right here, meaning our buy stop would have been here and our sell stop would have been there. Take profit for our sell stop would have been somewhere here, and take profit for our buy stop would have been somewhere here. Risk to reward of 1:2. And you can see, boom, our sell stop got triggered, and even if we are going for a risk to reward of 1:2, risking 1% to go for 2%, boom, would have hit our TP big time. Now, the reason why I'm talking about experimentation is there are some times where you see this sell stop will be triggered when it was just a fake out. So you see the sell stop will be triggered, and then the market will then retrace against you, go back, trigger your buy stop, and then continue going up. But remember, at that same time it was triggering your buy stop, you had your sell stop you had your stop loss for the sell stop at the same level. So you would have already lost 1% on this trade. And then if this one is triggered and it goes in your favor and you make 2%, you just lost 1. But guess what? You made 2%. So your net for the day would have been plus 1% right there. So that's what I'm talking about, experimentation. I won't come here and I say, okay, this is a one setup fit all, right? Something they used to say, a one setup fit all. This is not a one setup fit all where you can just use it on all assets. You will only be able to know based on experimentation or based on experimenting different assets and how they work to be able to know that, okay, I'm only going to be, so long as one of my sell stops are triggered, I'm going to delete the other one. So long as maybe one sell stop is triggered, I'm going to leave the other one. You only have to backtest and experiment for a considerable period of time to be able to actually make that decision. So that is very, 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 very crucial. Let me show you, let's look for an example on the one which leaving one of your stops in place would have still helped you. All right, let's just go behind. Remember, this is NASDAQ, and we only traded during the London and the New York session with this strategy. I'm looking for the one where we have both scenarios where you guys can see very, very clearly. Okay, this is London right here, this is London right here, and this is New York right there. Last candle before the session opens. This is our last candle before the session opens, meaning our sell stop would have been there, our buy stop would have been there. So you still see our sell stop was triggered and we still make 2%. So I'm just trying to look for one where even if our sell stop was triggered and we left our buy stop in place, I was looking for an example where the market actually retraced against us and then still hit our buy stop. You see, so if you're a beginner with this strategy, the one I would recommend is if one of your stops are triggered, delete the other one. All right, if you're a beginner, if one of your stops are triggered, delete the other one immediately. Then when you start gaining experience with the strategy and as you go ahead, now you start saying, okay, if today I'm risking, if say I'm risking 1% per trade, and if one is triggered, that's fine. I can just risk that 1%. Then I'll allow my other stop to be there. Even if it gets hit again and I'll lose 2%, and I'll know that I'm down for the day. But what if it hits, if the first one is a loss, and then the second one goes and hit 2p, boom, I still ended the day with plus 1% of my account. Show me someone who can end even the week. Someone who can end even his week with plus 1%, and I'll show you a multi-forex millionaire. Because just 1% on 100 million, no, not even 1 million. Just 1% on $1 million is $10,000. That's what I'm saying. Trading just becomes a game of numbers once you already know what you are doing. So lack of experimentation. You need to be able to experiment to know what you're going to do at what time. Data is king when it comes to trading. You can't guess your way to success in trading. You need that data to be able to know what's working and what is not working. Okay, I actually got that sound. I'm sure that is actually one of my trade triggering. I'm actually, you heard that voice, order field. So I'm actually very heavy in what do they call this thing again? In futures. So I've gotten more than, I think I opened my first futures account in 2019 or so. Then I abandoned it. I was focused strictly on CFDs, but I returned again to futures this in November, about a month ago, and I've already cashed out more than $50,000 with futures. So I'm going to be doing videos, subsequent videos coming on futures. So if you want me to do more videos on futures to show you guys how to trade futures as well, just let me know in the comment section and we're going to talk about that. So that is it. I guess the trade I just hit was this one on Nasdaq because I entered right here on this pullback and it's just been going up. But anyway, it is what it is, guys. So that is it, the importance of experimentation. Another reason why you will never find success with this strategy is improper risk management. Improper risk management. Remember, what will give you make you money at the end of the day with this strategy is having an edge. Having an edge. And how will you even have an edge with the strategy if you don't even know how the risk management for the strategy works or money management for the strategy works? That's why you need to be very, very flexible. For example, let's just go back again. Let's say I'm trading, let's say I want to trade, say, this particular setup, the same one we saw right here, right, on the New York session. Let's say I want to trade this particular setup. At this time, if I put it here, you can see this is 15 o'clock South African time, 3 p.m. my time in South Africa. So at 2:45, because this is a 15-minute time frame, the strategy will use the 15-minute time frame. So at 2:45, I'm already going to be setting up my computer and preparing and doing everything. So at exactly 3, I'll just need to come here, boom. I just measure the distance, the candlestick, the range. I call it the candlestick range. I just measure that distance. And I can be able to see here that was 200 pips. I immediately go on this risk calculator. I already showed you guys the risk calculator you should use. Go to Godlove University and click on trading calculator. Let me quickly show you guys. That's how. There's no other shortcut. There's no other shortcut. Okay, you can see this is my trade that just hit TP. Which one was that? Which one was that? Which one was that? This is actually futures. That's nice. That's nice. This is actually futures. This is actually futures. This one is hitting very soon. Okay. That's futures. So just go to Godlove University. Godlove University. You can even write a calculator, Forex calculator is right there. You can even see it's the first one, even suggests for you position size calculator or risk calculator, Forex trading calculator. You just click on it and it will be able to show you everything. If you come to this page, obviously, if the page is under maintenance, you will be able to you won't be able to use this one. So let's just say I just put this one. They'll ask for your email address. Just input the email address and you click on calculate. All right. If this one doesn't work and if it's under maintenance, click here to use the alternative. You click there. It's going to open on this website. So on this website, this is where you're going to choose the asset you are trading. Say you are trading gold. You choose the asset, currency pair, USD, account balance. Let's say you're trading with $100,000. You put $100,000. Risk per trade, let's say you're risking 1% per trade, you put it there. Stop loss in pips, let's say you're risking 200 pips, you put it there and you click on calculate. Click on calculate, you can see that's the lot size you can use on that account so that you can only risk 1%. You can say risk amount $1,000, that is it. So you already know the exact lot size you can use on that particular trade so that if the trade doesn't go your way, you only risk $1,000 or 1% of your account. And if it goes your way, since for this strategy, I recommend you go for a risk to reward of 1:2. You'll be making 2 times this or you'll be making 2% of your account. With this proper calculation or proper risk and money management with a strategy, you just need, look at this is going to shock you. You just need a 40% win rate to stay profitable. If you follow the risk management and the risk and money management tips I've shown you guys with this strategy or any other strategy I've taught you guys, you just need a 40% win rate to stay profitable with this strategy. Because with 40%, you have what? You have 4 winners, and you have 6 losers. All right? For our 4 winners, it means we had what? We had 4 times 2. Since we are going for a risk to reward of 1:2, we had 4 times 2. So we had plus, very, very important, we had plus 2% of our account. Now let's see for the losers. Remember, for anyone we lost 1% of our account. So minus 1 times 6. This will be now what? This will be minus. Okay, this one is 4 times 2 is plus 8%. So this one is now minus 6%. What was our net for the day? Remember, our net for the day will just be what we made minus what we lose. So it will be 8 minus 6. So it's plus 2%. Can you see that? Meaning even with a win rate of 40%, meaning majority of your trades are losers. Majority of your out of 10 trades, 6 of them are losers. You don't even need a 50% win rate to make money with this strategy. You don't even need a 50% win rate. That's it. I've shown you guys the example. This trader, there are some days you'll be able to take up to 10 trades. If I'm trading the London session and I'm trading the New York session, and during the London session, I trade Great Britain Pound USD, Euro USD, Great Britain Pound JPY. I trade about 4 pairs during the London session. New York, I trade about 4 or 5. So there's a possibility you can take up to 10 trades in a day. There are sometimes, if I have a buffer, I just keep going. It's that easy, you see. So that's why I'm saying, you understanding proper risk and money management with this strategy is crucial. You don't even need a 40% or you don't even need a 50% win rate to make money with this strategy. Now, let's talk about, again, the last point on our list, which if you don't understand, you will never make money with a GU or RB strategy, which is trading too many instruments at the same time. I'm calling it instruments because this strategy will work for all kind of assets you think of, all right? The asset just needs to be operating during that particular market session, or it just needs to be operating during that session window. So another killer, another trap is when you see traders, someone who have about 10 trades that the person has said buy stop, sell stop, about 10. Trading too many instruments at the same time is a deadly disease that will cause you never to find success with this strategy. What I would recommend is, for the start, for a particular session, go for 2 or maximum 4 assets. Go for 2 or maximum 4 currency pairs and wait until the next session. So if I'm trading the London session, I'll go for 2 to 4 assets, maybe Great Britain Pound USD, Euro USD, Euro JPY, Great Britain Pound JPY. Stick with those 4. Or occasionally I can add 5. You know, I know that, okay, I'm risking 1% per trade. Now, if they all don't go my way, I'll be fine to lose 5% of my account, but I've never had a situation where all don't go my way. Maybe if it's a worst day or if it's bad day for me, I can have 3 losers and 2 winners. So I lost 3% and make 4%. So I ended the day with plus 1%. And if it's a good day, I can have 3 winners and 2 losers. So I make 6% and lost 2%. So I ended the day with plus 4%. If it's a good day, I can have 4 winners. If it's a super good day, I can have 4 winners and 1 loser. Meaning I made 8% of my account and only lost 1%. So I ended the day with plus 7%. So you see, so trading too many assets is a disease that will cause you never to make money with this strategy. Stick to 4. The next point now, which is going to be a bonus point, is which assets should I trade and during which market session, right? So which assets should I trade and during which market session should I trade those particular assets? Let me just go to the end. I want to quickly show you guys something again. Just quickly show you guys this. Now, if I come here and we are talking about NASDAQ, right? Or we are talking about which asset to trade. The first thing I always told you, ask yourself which market session you want to trade. That's the first question. Which market session do you want to trade? If I want to trade, say, the London session, I want to only look for assets that are, volatile, liquid during the London session. So number 1 is Great Britain Pound USD. You can see I've already grouped all of them. Number 1 is Great Britain Pound USD. Very, very nice during the London session. If I just screw here, this was the London session yesterday. Boom, boom, buy stop would have triggered here, would have made a lot of money, 2%. If I go back again, Great Britain Pound USD, the London session was here. Last candle before London was there. Sell stop would have triggered there, boom, would have made money. Let's just go behind so that you can see. Let's check again. London session for this one was right there. This is the last candle before London session. Buy stop was there, sell stop was. This one was triggered. And I think we hit TP on it, so the long would have been there, stop loss would have been there, and we go for a risk to reward of 1:2. Boom. We even made more than that. 1:2 would have been here. So that was a banger. That was a good trade. So you see how understanding market session is very important. So London session, Great Britain Pound USD, Euro USD, any asset that has Great Britain Pound or any asset that has the Euro. All right, any asset that has a Great Britain Pound or anyone that has the Euro. So Great Britain Pound USD, Euro USD, or Great Britain Pound JPY, Great Britain Pound CAD, Euro, Great Britain Pound. That's very important, then go. If I'm going to the New York session, any assets that has the United States dollar or the Canadian dollar. Remember, we call it, you can call it the New York session or the North American session, meaning the Canadian dollar or the Canada is still part of the North American session. So any currency pair that has the Canadian dollar or the United States dollar, like Great Britain Pound USD, all indices during the London session, Great Britain Pound USD, US Tech, US 30, S&P 500, gold, USD CAD, USD JPY, AUD USD, all of that is going to work under the New York session. And the bottom line is just any asset that has the United States dollar or the Canadian dollar as one of the currency in the currency pair, meaning even Great Britain Pound CAD will also do very well. Just talking about, let's check Great Britain Pound CAD to show you guys, it will also do very, very well. This is Great Britain Pound CAD, and let's see what happened during the New York session. Can you look at this? Just look at this. Just opening my eye, this was the New York session. This was the New York session. Last candle before the session was this one, meaning our buy stop would have been there and our sell stop would have been there. Boom. Look at that. Buy stop triggered, TP would have been there, and we already hit TP on this particular one. Let's go behind it. That's Great Britain Pound CAD. Let's go behind it. Oh my God. Look at this setup. Look at this one. Last candle before the session open was that one. Our sell stop would have been there. Buy stop there. Look at this. Boom. We made a lot of money. So you trade the bonus point. You also knowing which asset to trade within which particular session is very, very important. And if you are trading the ASEAN session, any asset that has the Japanese yen or any asset that has the Japanese yen, you can trade that one during the ASEAN session. I don't trade the Australian session. The Australia or the Sydney session is another one I don't trade. So ASEAN, New York, and London. So currency pairs that work very well during the ASEAN session: USD JPY, AUD JPY, Great Britain Pound JPY. They will all do very well during the ASEAN session. Let me know your thoughts on the comment section on this particular strategy. If after watching to the end, you still find difficulties on trading with this strategy, that's why I'm here. That's why I'm here. Let me know in the comment section any question you have about this strategy. Data is king. Go back to the drawing board. Go back to your trading view and start analyzing. Start practicing this strategy because there's no secret. The secret sauce is already what I'm giving you guys. If you master risks and money management with this strategy, then you follow the tips. Make sure you go and watch the full strategy video, all right? Because on this one, I was just covering the traps. So go and watch the full strategy video. Go back and backtest, and I can guarantee you this will be the first strategy that is going to start making you profitable in Forex trading. Maybe you've tried everything and every other thing and it failed you. This should be the last thing I want you guys to try. And as we move into 2026, bro, you should already be moving into 2026 with a strategy which is going to make you consistent money day in, day out. Now, if you want me to mentor, you can see this strategy was a strategy from Godlove University, and that's why it was called a GUORB. So if you want me to mentor you one-on-one, show you this strategy amongst other strategy in Godlove University, check the link below to subscribe to the channel first, and also join my mentorship program where I will be able to teach you A to Z. If you want a robot that can also automate this, Patrix Pro has an inbuilt feature where you can also use to trade this setup. So check out the link below to use Patrix Pro, which has won 4 years in a row as the most profitable and the most viral Forex robot. You can trade this strategy on a pro firm account. There's no pro firm that's going to ban you for trading with this strategy. No. So if you are looking for my recommended pro firm, also check the link below to use the same pro firm I'm using, where you can get funded up to $400,000, keep up to 90% of your profit, and you can trade both futures and CFDs with FundingPips, which is my recommended pro firm. Recommended broker as well. Those of you guys who are trading with pro firms and you want to also trade with private brokers, also check the link on the video description and you see my recommended brokers. Click here to watch the full strategy video I made about this strategy. Check out this playlist. This is going to help you as a trader to win in 2026. Click here to subscribe to the channel, and I will see you guys on these other videos. Peace.